This is Tom Aspray with the Viper Report monthly AD line analysis for the month ending December 2025. Well, as we start a new year, the monthly AD line analysis, which I use for the major trend, is still positive and shows no strong signs yet of a major top, bear market, or even a sharp correction. NYSE Composite was up 0.82 for the month. You can see here we have the stocks only AD line. That's usually more sensitive. In other words, it often is negative when the all is positive. You can see it made a new high a month ago, and the all AD line more broadly includes all the ADRs as well as the stocks. Very strong there as well. The weekly chart of the SPY shows we were lower for the week, about 1%. But still in a positive trend. This 670 level, which was the low about 3 weeks ago, is the first level of support. Then we get stronger as we get down to 663.87. S&P 500 AD line, shows you the major breakout and the positive signal that's been in force, since April. The bullish percentage, according to AAI, improved last week, and you can see the ratio of the bull minus the bear percentage has resumed its uptrend, closing at 15, just above this prior peak in December. So that's a positive trend. Typically, as you can see back in here, that can get up into the plus 20 to plus 30 area before it becomes more of a warning. I do need to remind you that, as discussed previously, the cash levels in the big hedge funds is in low territory, which is a bearish sign. Looking at the daily chart of the NYSE Composite, you can see we have this trading range. It's been in effect pretty much since September, roughly 1,000 points wide. So we've broken out of that. If you measure to the upside, you get around 22,900, 700 points above where we are. Down below this, you can see that the daily NYSE All AD line closed the week back above its moving average. It also shows a breakout, which is suggestive of a breakout in prices as well. And once again, we have the bull bear. You can see it been in a trading range. It dropped down to minus 20, up above 15. So wouldn't want to see this drop back below minus 20 in the weeks ahead. If we look at the daily S&P 500 AD line, it also closed barely above like 3 issues. Its moving average, the weighted moving average, is still above the AD line. And my other platforms, you can see volume picked up, which is a good sign, and with a higher close on Friday. You can see the stocks only, weekly, monthly is positive, daily is turned up, but it's still below its moving average. One of the few. And of course the stocks all AD line, closed back above its moving average. That bodes well. Looking a little closer, you can see, we had this doji sell signal last week, dropped down to the 20 period EMA, which is now at 682.18. We closed about a point above that. And also the new pivot here is at 680.93. So, from the monthly pivot levels, 692, 703. You can see here that the VIX is still in a downtrend. So this peak from middle of December is the level we want to watch. This clearly shows that the NYSE All and the S&P 500 did finish the week above their EMAs. In terms of growth and value outperformed. So we tested this 20 EMA, turned lower, and you can see the MACDs on a weekly basis. They still favor a further decline. In other words, a rally in favor of value and away from growth. Too early to be conclusive that was a major top at the end of the year. Looking at the QQQ, a downtrend is pretty well established now at 25 625.52 and then 628.40. So, close back above the 628.40 would be bullish. The close at 613.12 was just below the new monthly pivot at 614 and well further below the 20-day EMA at 616.67. On the plus side, AD line made a strong new high, so it was leading prices. It was much more stocks were advancing at this peak at 625 than there were at 628 or 636. So once this pullback is over, that suggests that the Qs are likely to exceed both of those peaks. RS daily below its moving average, so Qs are not leading the S&P at this point. On a weekly basis, you can see the weekly AD line is leading prices. It made a new high to and 20 days right at 600. So that's the important support level to watch, right about 13 points below where we are. The RS has dropped slightly below its moving average, so this peak from November will be the next key support level. New high, new low analysis is still positive. You can see for the Nasdaq Composite, which is generally the more sensitive of the when compared to the NYSE. You can see downtrend here. So that's a major divergences. New highs picked up a little bit to 136 on Friday. Thing is, we haven't seen a sell signal from the new lows. So look at this level of 500. We're still below that. So if you get a move above that, that would be a more bearish signal. So far, that's not consistent with the other technical readings. As for the NYSE Composite, not such a severe divergence here. On that last peak, we managed to reach the early September highs. Still no pickup in the new lows. That's a good sign. 200, a couple of days with more than 200 new lows would be a reason for concern. Put call ratios, a surge in put buying just at the end of the year here. You can see we were up above 110, closed the week at 0.83. So right at 1, that means that there are equal number of puts and calls are being purchased. So that was, one of the highest levels we've seen for most of the year. My analysis suggests that those who bought puts, market average puts, certainly at the end of last week, will probably be scrambling to cover them by the middle of the week. The 90% analysis is S&P shows you there was well over 80% of stocks on the downside in the S&P, on Wednesday at the end of the year, 30 on Friday. Similar in the S&P 1500, so large cap, small cap, and mid caps saw some pretty good selling, and even more so in the Qs, almost down to 100%. I think it closed at 8, so nice rebound. But yeah, this was pretty like 95%. So that cleaned out a lot of long positions, I would imagine, and will create the environment for a better rally. You can see there was a slight divergence, here in the lower peaks on the upside. Had some problems running the watch list this weekend, so we'll just give you an overview. You can see this is for all the ETFs that we follow. 2 new weekly buys, both emerging markets, the EEM and the IEMG. I will be putting out a list of the new yearly pivots, which will help guide the ETFs we like in the year ahead. From a sector standpoint, this Tom list I often feature in the newsletter, gives you a whole rundown. Also included, the updated yearly pivots. So for the Qs, 551, 613 is where we closed. Pretty much all of these are above their new yearly pivots, okay? And I'll be writing up something about why this analysis is so unique, and these yearly pivots are support for the year. So we see something close below those, that would be signs of a deeper pullback. You can see gold shares, etc. And only the ITB, that's the one home construction, it's still below its yearly pivot at 99. It closed at 97.49. There's some interesting things we'll be talking about in the XHB, which at 104.55 is above its yearly pivot. Over here we have a new, 3 DTS in the XLE, and daily signals in the XOP, as well as the materials, and in the XLI and the XLU. Back at this time, you can see now I've sorted by the weekly DTS. So all these are positive on a weekly. You can see Qs are negative on a 3-day and a daily. Down here we have the materials have just given a daily. Their weekly and 3-day are positive. So down here, energy, as I said, a couple positive signals from both the XLU and the XLRE. So this gives a rundown. If you haven't really looked at the TNJ watch list and the rotation that are set up in there, thanks to Jerry's great programming, they provide you a pretty good signal of what transpires. This one of the screens we use to get a broad view. This is for GLD. So on the top here we have the daily. On the bottom we have the weekly. Of course, the weekly is the most important. This weekly chart here shows that it's been positive since August, this last move up. We watched this trading range and we determined, in early December, that this was a pause or a continuation pattern, and we've hit the 1.272 fib target here at 415.31. Not a lot, so we're still looking for more. It's positive. The new yearly pivot for gold is 352.27. So that means we'd need to see a weekly close below that to change that major trend. And if you look at the daily, you get a little drill down in here, a very nice move to the upside here, to this peak. We were looking for this 1.272 level is based on this decline, and we've already met that. So, we can look up here to, draw in the 1.618, maybe. Let's see. Oh, okay, here, let's change the color. Which is at 473.80. So that's a long ways above it. So once it's said, so this all looks pretty good and positive for the metal. We're also in Newmont, so I think a major top is not in place. So a quick look at the futures, weekly basis, still on the weekly buy signal here from November, so that's a good sign. We drop down to the daily. We got stopped out here, on last Wednesday, but no sell signal. We didn't reverse. So we had a buy here and, a stop out. If we look at the 260 analysis, you can see that we reversed pretty nicely here. The pivot and resistance level to watch next week is 6917. So I'll be putting something out on the use of the yearly pivots, and hope you'll take a look at it. And subscribers, of course, will get a list of the yearly pivots for many of the key markets in the week ahead. Hope you enjoy it. Keep me posted on your thoughts. Thank you very much.